In this video, traders, we're going to look at trading the Fed day. Stay tuned. Hey guys, a warm welcome to you. Alright, so if you're subscribed to the channel, you know that I've shared a couple of strategies that you can use during Fed day and during these market kind of announcements that are market moving, but actually the announcement isn't really out of line. It's not a surprise. It's as expected, and that's kind of fading those spikes and stuff. So talk about that briefly, but I also want to look through the recent Fed day. And by the way, it doesn't matter when you're watching this, this is kind of good stuff and things that, they come around again and again and again, and they can present really good opportunities for a trader. And so what I'm going to do now is hit the screens. I'll share with you some of my thoughts on trading the Fed day. I'll show you some of the trades I did, some of the trades I didn't do that were really probably the better trades. But this is how we learn and how we improve and how we kind of know that we're comfortable and confident when we go into another day that's non-farm payrolls or Fed or whatever it may be. So let's hit the screens now. All right, guys, so I've got in front of you here it's a 1 minute chart because this is kind of what I wanted to show you. And this is day trading the Dow contract. So this is a CFD chart, but it could be the YM, same thing, it's the same pattern. So obviously this is where Fed came out. So it came out and it doesn't matter what happened, but ultimately they cut as expected and nothing was a surprise. And so we had what is usual, guys, on Fed day or any day's market moving news when there's no surprise is this. We have a push to the highs, we have a push to the lows, and we come back to the middle. We almost always have that, and it might not be in that direction. It might be low to high, back to the middle, but we almost always get that. And I talked to you, and I've shared this strategy with you before, that we literally, we extend the level that we get to, we do a half of 50% and we take it for a move back to it. And it works and it works and it works time and time and time again. So I don't want to go into depth with that one. Go and dig that one out. Make sure you're subscribed to the channel and go and have a little look through as well, guys, for that one. So that was there, and I was obviously trading that, fading that. Bang, money in the bank, move on to the next trade. So now I'm positioned on the short side, and a little bit later, I'm not going to pretend that I was kind of up here and shorting here and buying at lows. This is the real world, guys. No, but I was positioned on the short side, and I got a kind of good chunk out of the market and a couple of goes, and I was sitting kind of patiently through selling these resistance, because to me, let me just kind of, I don't dwell on this one, but I want to kind of talk through it. After we failed to push out to highs, we've pushed low, push high, that's normal Fed reaction, right? And then when we failed to break through highs, we pushed to lows, fine, normal Fed, normal Fed. Now we start to hold at lows with resistance above us. Yes, we've got some support here. To me, my thesis was this: we're going to eventually crumble over, and we do to move to the downside. Now, being Fed day, we could quite easily do that for half an hour, take off some scalps, and then rally back up again. So you've got to be open-minded on Fed day. So that was my thesis, right? However, so I'm sure I've made a few trades on the short side. I made a few trades on this chop. It's kind of this Fed day setup that I like to do. We pushed down, made a few short trades. I'm now positioned short. We come down, and it was a beautiful exit. I had a beautiful scale out of my position because I'm aware this isn't like the best trade ever. And I just saw us pushing to lows, and I'm just taking some position off. Then we started to rally back up and ended up covering the position, the rest of the position, as we pushed back up, because I didn't like that position. It wasn't the greatest. So the end trade wasn't fantastic. I got some profit, and yes, it was a kind of hero's exit on the low tick, if you like, but it wasn't a great trade because ultimately it was only a small chunk of a bigger position. I ended up taking the rest of it out up here because my thesis was lower. So why would I take the whole thing out there? I'm looking for a lower move. Right, so that's that. But that wasn't the best trade. The best trade of the day, and by the way, at that point, that was me done. I hadn't traded this, and I think that's something I should be getting better at. I've got a kind of tendency to have had a series of great trades on the day, especially if the bias changes to not being as aggressive as I probably should be. But the best trade of the day, guys, and something that we often get on these Fed days was this. This is just textbook stuff. And I know that if I wasn't involved in the short side here, I would be all over this because this is my perfect thing. But because I was involved on the short side, I banked some profits. I kind of not got exactly what I wanted as well. So in my mind, I'm thinking, your thesis has not come true. You've made some money, but you haven't seen the flush that you thought you were going to see flush. So you're not that right. Yes, you put money in the bank on this, which is good, tick, but you've not seen the flush, so you'll read it slightly out. So bearing that in mind, I'm a little bit gun shy of pushing on the next thing. So anyway, why is this such a good setup? Let me show you. And you guys might have seen it already, and maybe you've traded it, and hats off to you if you did. Congratulations, you saw it, you spotted it, you pulled the trigger on it. It's this. You know, we break through the lows and we don't push to the downside. And imagine me, I'm on the other side of this trade now. I'm the guy on the losing side of it. Yes, I took some out into that lows. Great, good price read, good tape read. Well done, pat on the back. But I'm wrong. I'm still short and this thing's ripping. And yes, I'm mindful enough not to let that get damaged and take some off. I'll take the rest of the trade off as we push up here and kind of scratch it really and get a small profit on that little chunk. But I'm the guy who's covering into this rally. I'm the guy, if you're long, who wants to be stuck in it. So look at this, we now push above this key level. So we've got this scenario, guys, we've got the push up and now we're flagging above a key level. It doesn't get nicer than this. We broke through lows, faked out, caught a few shorts out, ripped, very, very quickly ripped. Bearing in mind, this is a 1 minute chart, just for clarity, guys, very, very quickly. And now we're flagging above what was a really key resistance level that people like me were working shorts off and no longer. So we get one more final dip lower, a little test, fails and bang. And that was the entry. And I remember looking at it, I remember watching it, I remember seeing it, and I remember going, oh, like hesitating. I was like, your thesis has been wrong before, you got away with it. Should you be trading this if your thesis is wrong? Reality, guys, I should have taken that on the dip there, just put a stop under that low and gone, you know what, it doesn't matter. Take the trade. The trade is setting up. Your risk reward is so good here. Just pull the trigger on it. So we're not all perfect. Things happen, mistakes happen. Green day, great, could have been way better. So, but this is the pattern that we're learning from. This pullback above highs, holding above highs, dipping down, having a little test into there, failing, come back up, bang, you're rallying, and that was the strongest rally. Your first target's going to be your VWAP, your second target's going to be your prior high, and yes, there was a gap fill. I don't think if I was long, I would have looked for the gap fill. If I'm honest with myself, I would have scaled out into this, probably about here within my exit, because I would have scaled out into the break of the high, expecting it to rotate back, maybe do a gap fill later, but not expecting that in this one big move. And so yes, was it annoying to sit through this and think, you know what, you saw it, you didn't pull the trigger on it, for whatever reason you didn't pull the trigger on it and you just left a big chunk of money on the table. I'm not gonna lie to you, would I wanted to be in the trade? Of course I would. Would I want to see in the trade in a full size? Most definitely, but I wasn't. However, we can learn from this, and you know, from my perspective, my takeaway is, hey, when you've got a trade that's setting up and the risk reward ratio is so good, pull the trigger on the trade. Pull the trigger on the trade, and if you're wrong, you're wrong. And you know, I know that it's protecting me because I wasn't right fully on the trade, didn't get the flush, even though it was profitable. I didn't feel like I got the right read on it, and it's a protection mode, so you can't be too harsh on yourself for it. And then there's the other learning side of it, which is for everybody, which is, hey, when you see this kind of setup, fake out, hold, when the sentiment changes distinctly from this point, oops, that's the worst line ever, but from that point, you guys can see it, it's here. The sentiment changed completely from being quite bearish to looking like we're going to roll over to, hey, we've dipped through lows, faked out, now we're holding above highs. Massive change in sentiment in 1, 2, 3, 4, 5, 6 minutes. And of course, we're flagging at highs and then you're off. So you're either taking the flag, a break of that, or you're waiting for a dip below. And then, you know, targets, as I said. So, guys, the thing is, keep an eye out. And this is this may be short-term trading on Fed day, but this is kind of still valid for longer-term charts. That could easily be a daily chart. You know, you've had that whip around, some earnings come to lows, and then in a couple of days, it's changed sentiment completely from dipping through lows to kind of rally, holding at highs. There's your key. And so watching this and looking for the flip and the change in sentiment is really useful. Looking for the clues, looking for the dip below lows, looking for the holding above highs, those two big clues, all this kind of stuff. And then you might get on the end of a trade like that. If that's a swing trade, it's going to be a beautiful swing trade. Day trade, beautiful day trade. So anyway, guys, that's it. There's just some honest review of the Fed day. If you like this kind of stuff and you want more of this, then a thumbs up appreciated. Comments in the comments section below. Let me know if you got on the end of that, if you were trading it. I know many of you guys trade the currencies, but again, same pattern. It could be valid on whatever market happens to be the Dow for me. That could be euro, could be gold, could be crude oil. It's that pattern and understanding that. And that one's definitely going to go in my folder of setups. All right, guys, take care and see you next one. Bye-bye.